So people are like, has the banana zone been cancelled? Is Raoul a moron? Yes, I am an utter moron, and I will take that all day. However, the banana zone is a multi-phase affair and a multi-month and over a year affair. The banana zone starts, this is the banana zone in the box. We then have a corrective period. Look at this, corrective period, corrective period, corrective period, corrective period. Does this look any different than this one? No. And then what happens? Banana zone phase two, banana zone phase two, banana zone phase two. Then we have another corrective zone.
Has the banana zone been cancelled? That's the question on many investors' minds as Bitcoin struggles to maintain its momentum. Just weeks ago, optimism was at an all-time high. Powell's thesis of an explosive phase seemed validated as Bitcoin surged past key resistance levels. But recent price action has raised doubts. Instead of the parabolic rally many expected, Bitcoin has entered a period of sharp corrections and choppy movement. For some, this volatility is proof that Powell's market outlook was overly optimistic. Critics argue that if we were truly in the banana zone, Powell's term for the rapid acceleration phase of the market cycle, crypto asset prices should be surging consistently. Instead, many altcoins have suffered heavy pullbacks, and Bitcoin's price action has been erratic, leading skeptics to question whether this cycle is playing out as expected. They claim Powell underestimated macroeconomic headwinds, liquidity constraints, and shifting investor sentiment. However, in his latest market update, Raoul Pal pushes back against these concerns, reaffirming his belief that the banana zone is very much intact, but misunderstood. According to Pal, the banana zone isn't a straight vertical move. It unfolds in multiple phases, alternating between powerful uptrends and necessary corrections. Investors, he argues, are making the classic mistake of assuming that prices should rise in a straight line. He points out that similar corrective phases occurred in previous bull cycles, often shaking out weak hands before the next leg up. In his video, Pal provides some important insights about Bitcoin, the banana zone, and global liquidity, asserting that his framework still holds up. As we bring you clips from Pal's market update, please share and like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Because this is what happened in 2017. It played out again. There we had 1, 2, 3, 4, 5, 30% corrections. In fact, many of them were almost 40%. I don't remember this. Well, I do remember the one in June, July, because I sold out at about 2000. But generally speaking, you don't remember this stuff because in the end, the gains compound. So it's really important to zoom out and realize volatility is part of the story. It's how you get them. You can't have them without the volatility. Volatility is what keeps leverage in check, keeps the market healthy. So it's very healthy market right now. When we go back to 2017, January, like now, came out of the gate, collapsed. Why? Because financial conditions had tightened. And then it went up, recorrected, and didn't get going until mid-March. Where are we now? Mid-March. Guess what's likely to happen? Number go up. What happened that time? It went up big time. It went up 23x. It will not do that again this time. But the point being, it's all to play for. And we will get massive volatility in the middle, and you won't believe it, and you think it's going to be topping, and every FinTwit moron will be telling you it's topping. It won't be. We've got plenty to play for. Bitcoin, 14-day RSI, double bottom oversold. Okay, every time that happens, goes up. Sometimes it has this sideways consolidation period, then goes up. Will we have more sideways consolidation? This chart's maybe out of date by a week, for sure. Will it go up? For sure. Are we anywhere near a top? Here's our GMI cycle finder top that we use for exponential age asset management. We use this as one of the key inputs into what we're doing and how we allocate to funds. We're nowhere near. NASDAQ, let's talk about equities. You guys are nervous Nellies. This is like one of the most bearish ever readings in the history of the NASDAQ. Oh my God, Trump and Scott Bessent and tariffs, and they're all going to make us die. And you guys, stop. You are all way too bearish. The percentage of stocks trading with a RSI of less than 30 is almost record territory. And guess what? Global M2 Because the everything code drives everything, drives NASDAQ too. And you guys trying to sell the NASDAQ here are selling something that is perfectly priced for liquidity. And we've had these liquidity air pockets in the past. Liquidity air pocket is when liquidity is not rising, NASDAQ overshoots, it recorrects, comes back down to trend, and then follows liquidity. Remember, NASDAQ has a 97.5% correlation to global total liquidity, which is the index that we use on a broader basis. 97.5%. Bitcoin has an 89% correlation with global liquidity. Global liquidity, I wrote about this in GMI, and there's probably not much time to talk about it now, but is my preferred measure these days. If we go back to the early phase of the everything code, the balance sheet was the main thing. After the balance sheet use, we started using Fed net liquidity. Once people understood that the balance sheet was printing of money and debasement, they started moving to Fed net liquidity. Now, all of FinTwit understands Fed net liquidity, as does crypto Twitter. And so they're looking at the TGA and the reverse repo and all of this stuff. Meanwhile, the game has moved. The game is always moving. The game has moved to total liquidity in the US and everywhere around the world. Total liquidity includes M2. It includes net liquidity at every single major economy level, net liquidity, plus M2. And M2's largest driver is the dollar. That is what they're now doing, which means that they're pushing the monetary policy onto the balance sheet of the banks themselves.
One of the most important factors shaping this cycle is global liquidity, the fuel that drives risk assets higher. Powell has long argued that Bitcoin's trajectory is closely tied to global money supply, and the data backs it up. Historically, Bitcoin and the NASDAQ have moved in near lockstep with total global liquidity, and despite recent pullbacks, that liquidity backdrop remains supportive. Central banks may not be outright printing money, but the mechanics of liquidity expansion, from government spending to bank balance sheets, continue to create an environment where capital needs a home. And in a world of debased currencies, that home increasingly looks like Bitcoin and other hard assets. But that doesn't mean the ride will be completely smooth. The market is currently navigating a liquidity air pocket, a temporary stall where money isn't exiting the system, but isn't expanding rapidly either. This kind of slowdown can lead to corrections, causing many investors to question the strength of the trend. Yet Powell argues that these moments are inevitable, even necessary, to prevent excessive leverage and speculation from derailing the larger move higher. So what happens next? If history is any guide, we're likely on the brink of another phase of strong movement. The Bitcoin chart is flashing signals that have historically preceded significant price expansions. At the same time, broader macroeconomic forces, including expectations of monetary easing later this year, suggest that liquidity conditions will improve rather than deteriorate. That's why Powell remains confident that the banana zone isn't over, it's just in its natural cycle of surges and resets. Here are more clips from his video.
Other thing, we just had a massive move in the dollar. Bitcoin versus the dollar. Every time you have a massive move, Bitcoin goes sharply higher. Okay, so I think you're getting the point. So the common refrain I get on X is, oh, look, Raoul, he's the banana boy. So people are like, has the banana zone been cancelled? Is Raoul a moron? Yes, I am an utter moron, and I will take that all day. However, the banana zone is a multi-phase affair and a multi-month and over a year affair. And those of you who expect number go up all the time are only remembering what the banana zone is at certain periods of time. Your number's not going up because you own a bunch of shit alts and you're like complaining. Okay, I get it. Let's go through this again for you morons out there. The banana zone starts. This is the banana zone in the box. We then have a corrective period. Look at this. Corrective period, corrective period, corrective period, corrective period. Does this look any different than this one? No. And then what happens? Banana zone phase 2. Banana zone phase 2. Banana zone phase 2. Then we have another corrective zone. And you're all going to be throwing your toys out the pram. It's all over. It's just like 2021 again. Blah, 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 blah. And guess what? We will correct and it will go higher again. That's how the banana zone works. And you guys have to learn patience. I know I say this all the time.
The markets thrive on emotion, fear, greed, and impatience. And right now, impatience is driving much of the skepticism around Raoul Pal's banana zone thesis. But as he makes clear, this isn't a straight-line rally. It's a structured, multi-phase journey. Investors who misunderstand this are the ones most likely to get shaken out. The reality is, Bitcoin's historical cycles have always followed a pattern of explosive growth, sharp corrections, and renewed surges. What we're seeing now isn't the collapse of the banana zone. It's the natural ebb and flow of a high-volatility asset moving within a broader uptrend. The biggest mistake investors make isn't holding through turbulence. It's exiting too soon, just before the next move higher. Pal's core message? Patience is key. Those who expect number go up without setbacks are missing the bigger picture. Bitcoin and other risk assets are part of a much larger macroeconomic game, one that's still being driven by global liquidity expansion, institutional adoption, and a long-term shift towards decentralized assets. So, is the banana zone cancelled? The answer, according to Pal, is an emphatic no. The only question that remains is whether you have the conviction to hold through the corrections and capitalize on what's next. In related news, Bitwise CIO Matt Hougan believes Bitcoin's recent pullbacks may be setting the leading cryptocurrency up for a 190% upside rally. He revealed this in his latest weekly memo to Bitwise investors, describing it as a function of what he describes as Bitcoin's dip and rip pattern. A section of the memo reads, "One of the most frustrating things about owning Bitcoin is that, in moments of crisis, it doesn't behave how you'd want. People buy Bitcoin as a hedge asset, but when markets get volatile, Bitcoin tends to pull back in the short term." We saw this most recently last week when rising concerns around tariffs sparked a sell-off in equity markets and in Bitcoin. My colleague Juan Leon wrote the definitive piece on this. Juan looked at all instances over the past decade when the S&P 500 had fallen by more than 2% in a day. He showed that, on average, Bitcoin actually fell more than the S&P 500 during these pullbacks, sinking roughly 2.6%. But Juan's research showed something else. If you had stayed invested, or bought more after the pullback, you would have done very well. On average, in the year following these sharp pullbacks, Bitcoin rose a shocking 190%, dramatically outperforming every other asset. I call this pattern dip then rip, and historically, it's one of the most consistent patterns in crypto. In his memo, Hougan applies Wall Street's net present value framework to Bitcoin, explaining how its short-term price moves are influenced by investor risk perception. While Bitcoin doesn't generate cash flow, its value today is based on future expectations discounted by risk. Bitwise projects Bitcoin to reach $1 million by 2029, but recent tariff-related uncertainty increased its risk discount, causing a short-term pullback despite an improved long-term outlook. Hougan explains that while economic uncertainty raises Bitcoin's future value, it also makes investors demand a higher discount, temporarily lowering its net present value. However, if market conditions stabilize and risk perception eases, Bitcoin could rebound sharply, following Hougan's dip then rip pattern. Do you agree with Raoul Pal's and Matt Hougan's analyses? Please drop your comments and observations in the comments below. Also, ensure you give this video a thumbs up, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.